real quick review. We only posted 3 topics last week, or 3 recently posted contents there. Previously released content and review of some emails that came through. A look at another successful pendulum adjustment for the bull put credit spread approach. I had to manage another one today, but I did it a little bit differently. And hedging stocks directly versus a portfolio hedge. So those are all public on YouTube. You can check those out at any time. Make sure you subscribe to the channel to get other updates as well. Also this week, I spent some time updating some of the playlists on PowerOptions. There's about 15 different playlists that are available, 12 to 15 that are available. These playlists are designed to introduce strategy concepts, criteria discussion, tools to use on PowerOptions to implement those, comparisons on different structures as well as other strategies, managing winning trades, managing losing trades, exit strategies, and more. The recent ones we've updated, of course, are on our top topics that we've had recently within the last 2 years on bull put credit spreads, following the discussion that I just mentioned as well. In that case, bear call credit spreads, tools, criteria, management techniques, calendar call, diagonal spreads, poor man's covered call, whatever you want to call those calendar spreads. 9 videos there. Bear put debit spreads, intro, structure, management, criteria, and comparisons. And then call buying and long calls as well. So those are just some of the new little playlists that we've updated for you. So if you're getting interested in the strategy, you're getting started to research a new strategy, check out our YouTube channel, check out the playlist. That's a good place to start. And of course, more will be coming very soon. All right, all that being said, let's go ahead and pause the screen. We're going to switch over to PowerOptions, and we do have some questions, of course, that have come in live. We also had a question that kind of came in via email, and I'm not sure if the question of the PowerOptions member who came in, who asked it via email, is joining us today. I'll take a look at that in a moment, but I think I want to address as a question because it's vastly important, and we actually covered this just a couple of weeks ago in a different sort of comment and in a different sort of structure as well. Okay. All right. So first things first, this one was from Mike. And Mike asked, I'm working on a system that is targeting driving cash by writing naked puts. So cash secured puts, I should say, naked puts as well. I'm only a few weeks into this, but I have a question. Today I have a short put option on UPST at 127. For the last few hours, the stock has been hovering right around 127. If it expires above, then I keep the premiums good, and below is not so much because I was hoping not to own the stock. When do they calculate the closing price? Is it right at 4, or if things are still active after 4 p.m., 402, 405? He says, I might give up a little bit of premium in the future to lock in gains at 355 if it's closer than that to take a chance. Okay, so for Mike, real quick, let's go ahead and take a look. Now, I put his position into the portfolio, and we see here that the closing price was around 128.27, right at the last data run, although we might have had another data run since then. When I saw his email, it was around just a little bit after 4. He sent it at 3:55. I got it right at about 4 o'clock when I was able to get to the answer. And what I typically do in this situation, the quickest way for me to view it, you can view it, of course. Your broker probably has this information, shows you the updates of the trade time after hours. Are there still settling prices for the different orders that have come through the different stocks? And they're still setting the price based on all of the securities that are in the S&P 500, NASDAQ 100, and so forth. But from PowerOptions, the easiest thing to do is go to company info and news, and just go right to news. Now, this just takes you simply to Yahoo Finance. But they do a pretty good job of updating and showing the after-hours prices. When I saw Mike's email, I immediately went in and checked this, and at 4:10 p.m. Eastern Time, the price was right at 127. What I don't know is if at 4:02 or 4:05, as Mike had mentioned, if the stock had dipped below that, which might have been a concern. But then moving forward at 4:13, let me get my notes here. The stock was at 127.99. It had moved up another point. At 4:15, it was 127.84. At 4:16, it was still about the same price, 127.95. 4:17 is 127.87. At 423 is at 128. And again, here, of course, at, oh, I'm sorry, it's still changing, but at 440, it's at 128.27. So again, I'm missing those 10 minutes between 4 o'clock and 4:10. When I saw it at 4:10, it was at 127. It might have been below there beforehand, and as they were going through looking for in-the-money options, it is a possibility that that position could have been assigned. So Mike, and for everyone, the general answer I would say is if you're within 0.3 to 0.5% of your short put strike price, short call strike price, it's being threatened in that case. What I want to do is likely close the position before 4 o'clock. I don't want to take the chance of that extra occurrence of happening. Now, when I enter a bull put spread, I know it's different than a cash secured naked put, but if I was in a bull put spread on UPST, when this position was opened at 228, and by the way, the stock was around 157 on Monday after a huge run up from earnings in that case. I'm sorry, so I assumed, I'm sorry, at 228, it was probably a premium of around 65 cents or 70 cents. That's what it was around the close on Monday on 228. As Mike mentioned, he was doing weekly options. But if I had sold this as a bull put, maybe sold the March 127 and bought the 125. When the stock dropped down to 1%, probably 128.27, whether that was this morning or a little bit later, I would have looked to maybe close the position or adjust the position or roll the position. At this point, even though the stock is falling, depending on the buyback cost for the option, I could have rolled out maybe to next week for a 120, maybe a 122, something along those lines to get a premium that covered the buyback cost plus the initial premium we received. And if we were still neutral to stable in the market or neutral to stable in the stock, we'd roll the position out or just close it. I don't know what this position did. I don't have intraday quotes on this particular position. But we do have the research tool here on PowerOptions, and I can go into the put research tool, which shows me the available data for this position since it was released on the market. And we see the issues that we've had. This is the implied volatility, and this is the option bid price from 227, 228, around 59 cents. Maybe it was 60 cents and then $1 there. On 3.2, it looks like the premium was around 12 cents or so. On 3.3, it was 8 cents, and it opened today a little bit lower. And how do I know that? Because what this page also shows you is the current session high and current session low. At some point this morning, I think, or some point during the trading day at least, the low point for this option was 4 cents. And you see here at the close, right around that 4 o'clock, bid of 1, ask of 38, midpoint of 20. If I had collected 70 cents for it, and I saw a chance yesterday to close it for that 8 cents, or to close it for a little bit less than that, making 80% of the profit, that is one of the triggers I like to use on my bull put credit spreads, but most importantly, on cash secured puts or covered call positions. If we still have time left, even a day, and we've made 85% of the expected profit that we had on the position, it's a good idea to just close the position, to not worry about any extra time where it can come back and go against you. So you might want to set an alert there in the portfolio as you're tracking the positions to be notified if your position has changed to a profit of 80% of the max position that you expected to make. And again, the two general rules there, of course, that I might have set in the alerts is to be notified if the stock was within minus 1% of my short put strike price, or at any point if the position increase had gone to 80% of the expected maximum profit on the position. Those are just a couple of alerts there that I would set. Now, right now, it's still showing the midpoint at 20. Oh, I marked that as red. I'm sorry. That was the wrong way to do it, but it is within the 1% rule. But again, closer to expiration, Friday from expiration, if I'm still holding it, I've got 2 hours to go to Friday's close, and that option was within 0.5% of my short put or my short call strike price, or 0.3%. If I can close it for a good profit, I'm probably just closing the position earlier so I don't have to worry about that position. So I don't have to worry about it anymore and keep watching it to the end of the day and then keep hoping in that last 5, 10, 15 minutes in the after hours as the stocks are still adjusting. Did I get assigned? Did I not get assigned? So those are just some thoughts that you can use, Mike, going forward for your naked put approaches and for other approaches as well. A more full presentation on this, as I mentioned, was discussed a couple weeks ago on the YouTube channel. Let's see here, 14 days ago. Can a spread or sold option end up in the money after hours? So that was a brief discussion that we had there. It's 21 minutes long where we talked about other concepts of that. You might want to check that one out. You can just go to the channel and it'll be right there in the recent videos. So that's a little bit more in depth and a little bit discussion on some of the alerts you might consider, how to set them in the portfolio for this type of situation.